Hello, my name is Ray Ostrander with Contrast Asset Management. And if you're watching this, you're probably fairly familiar with REITs. We manage a REIT called Green Thumb. And I want to share with you today a bit about what we look for that might be a little bit different and some of the specific assets that we focus on and our management style. Here are a few highlights. This is obviously a pooled fund, so that allows investors to be diversified. We focus on assets in the Midwestern United States. Multifamily residential is our focus, and we're yield-based. We have a 15 to 20% projected return, and that's based on a 7% distribution from profits, and then the additional 10 to 13% from that 50-50 split on equity. We're looking to raise about $100 million, and our current unit cost is $10. So what is it that makes us different at Contrast Asset Management? It really is the products that we focus on. We're looking for products that a lot of other people aren't necessarily interested in, or they overlook because they don't necessarily have the same skill set that we do. We look for those distressed properties, C and D class assets in secondary and tertiary markets. Why? Because they're significantly lower priced at a per unit cost. But the revenue that can be generated is substantial, especially if we address two major factors: the deferred maintenance on the property that hasn't been complete, as well as improving the overall management and the culture on the property. Because sometimes in these environments, the customer service isn't great. So at Property Max, which is the management company that we are, so we do not third party out our management, which is one of the largest challenges that issuers and managers have. We are the ones who are hands-on and value-add driven. We're able to go in and assess the challenges on these properties and fix them up, certainly, but improve the overall experience for residents. And I'll talk a bit about that in a couple upcoming examples. Miller Beach Apartments is a really great example of our acquisition process. When this was pitched to us by one of our brokers, I loved it because I loved the income. You know, we were getting about $650 on average per unit, and the cost to purchase that unit was $30,000. That ratio is always enough to get our attention. The challenge was, this is in Gary, Indiana, which is one of the toughest markets in the United States. There are a lot of challenging features. The fundamentals, needless to say, are not great. However, at those price points, we wanted to take a look. We went down and took a look, and there were some interesting things about this property. Number one, it was spread out across a fairly large area here. It was about 14 buildings over 20 acres, right in this area here. Neighbors, you had to the north of us here, there were houses along the shorelines, $1 million homes. It was a desirable place to be in Miller Beach. And Miller Beach is kind of what all the residents wanted to call themselves. Proper address was Gary, Indiana. It's all a part of Gary. However, there is sort of a normal division between Gary and Miller Beach. And there's a couple areas. One is literally the other side of the railroad tracks that you see going across here. And two, you've got, there's just these gaps and this large sort of area of parkland. And as a result, you don't see as much movement. There's a break between these two areas. So this particular property was really separated from the rest of Gary. In fact, it was the biggest problem in this little, neighborhood that we were in. So we were the ones who had the biggest control over what was going to happen in this neighborhood. And if we went in and did our job and improved the value of the property, helped residents have a better experience, attract better residents. We had to go in and we deal with crime, and you've got all those kinds of issues on the property. That's what we focused on, and we were able to do that at this property. So it really was a D-class asset with a lot of challenges, and that is kind of our expertise. You can see why a lot of other people aren't necessarily excited about doing it. I loved it. If any of you had the chance to go through Miller Beach, you probably want to stop at Vibrations. They have a great shop on the main street. It's a nice little town. I really enjoyed it. I lived on site myself for 3 months as we began the stabilization process. A great community and great people. And when we were in there, we just had to deal with the problems you deal with on property. There are criminal elements. There are people who are not paying. Some can't afford to pay. Some are just not paying. And you have to work through these issues. But part of our job is to approach people with some empathy and compassion for their situation. Maybe the previous landlord wasn't addressing issues. You can be sure that was the case, because those are some of the problems that we come across. A lack of attention to maintenance issues, and generally a lack of attention to the residents. And if we can just treat people with a little bit of dignity and respect, address their problems, we often find that they're a little bit more willing to pay and pay on time. with people who end up being challenges, some of the first things we do on these properties is we go in and we address lighting. We typically partner, like in this particular case, we partnered with local law enforcement. We had officers living from both Lake County and the Gary Police Department who lived on site and would work. You know, they would provide us some off hours time to come out and patrol the property and be available. And by just doing those things, it does cost a little bit of money, but it creates a safe environment. And that's the first thing that we want to do when we work on the properties, obviously cleaning it up and improving it. And as a result, rents go up. When rents go up, our income improves. The bank in particular really likes this because it allows us to refinance. That would have been our objective, to refinance the property, pull out some equity and reinvest it somewhere else and improve our overall leveraged returns. In this case, we actually sold the property. And we did that because interest rates were at all-time lows. We were buying this at almost a 10% cap rate and we're able to sell it at a 4. In this type of a market, that's insane. We hadn't even finished the project, but as many of you remember, as we were coming into COVID and through COVID, price points were still going up dramatically. And we just felt it was more prudent to sell the property. So we did, and our investors in this case, we bought the property for $18 million, put in about $4.5 million of CapEx, sold the property for just over $34 million 2.5 years later. Obviously, we were very happy with the results of this, but it started with making sure we had the right acquisition. And ultimately, part of what's best about what we do is what I mentioned earlier, is our ability to manage these properties. We do it ourselves, we do it on site, we don't farm this out to third parties. So you can see why Miller Beach Apartments is a great example for us. It's an extremely heavy lift in a tough market, and we did well. Obviously, our investors were very happy with the results, our lenders are happy, and after we exited that property, we actually did not purchase another property for 2.5 years. Well, obviously, we don't make a lot of money if we're not investing capital. But because interest rates were at all-time lows and prices were very high, we bought this where we could project a 10% cap rate. We sold it at a 4% cap rate. That type of compression in a market like Gary, Indiana is insane. So when we got out of this, you didn't have to be a fortune teller to be able to figure out we were going to see some price movement, and we obviously have. By sitting out of the market for a period of time, we were able to see 20, 30% reductions in price. And if we're putting 20, 30% down on these properties and the price drops 20 or 30%, that's almost 100% of our working capital that we would have lost in equity had we entered the market when we did. So we're not about picking bottoms and tops, but we are about being sensible. And the next project that we got into was great. It's in Clinton Township, just north of Detroit, Michigan, another tough market, but this is really a great environment. It's a blue-collar neighborhood, working class, it's stable, and a lot of times people will say, well, how do you get the same value out of this type of a market? Well, in this case, the seller was particularly motivated. If someone needs to sell quickly, they may be more motivated, even if there isn't as much work to be done on the property. So this was great for us. And we worked with the seller. They were able to, hold an equity position. We got creative about that to make it a really good deal for the seller and a great deal for us. But the challenge and why the seller needed to work with us is their economic occupancy was low. Banks aren't particularly attracted to that kind of thing when they're looking to lend at high leverage. So we were able to come in, and we did have some experience. We worked with the lender who we worked with in the past, who's seen us do some good work, and they were excited about this project. This is kind of the aerial view of the project. It's again similar to Miller Beach in the sense that it's spread out over a number of buildings, and we kind of control what happens in this neighborhood. There's sort of one way in. It helps us to secure the neighborhood and create a safe environment for people, and ultimately that safety in an area helps drive up property values. So it's nice that we kind of control our own destiny to a certain extent. These types of assets are really exciting for us. We're 6 months in. We've done a lot of work on the CapEx, the capital repairs that need to be done on the property, and we're starting to see residents feeling good about what we're doing at the property. It feels good. It also feels good that our rents have started to go up, and people are happier to pay those rents because of what they're getting in return. These also can be feel-good projects. We know that people are having a better experience. Their kids feel safer. They're being treated well at the property. And we start to coordinate with local law enforcement and work with local charities. It's the kind of thing that helps people have a great experience, which helps our bottom line, but obviously we're helping the communities that we work in. So Country Squire and Weathervane are examples of existing projects that we're working on. I wanted to share a couple of projects that we exited as well. And they're very similar. There's one major difference. They're in Canada, not in the US. And prior to about 2015, we began to think about investing in the US and building our infrastructure to be able to support a move. And the main reasons why, like I grew up in Canada. I'm a Canadian, I'm proud and I love our country. The challenge that we see, at least in the area where I live, just sort of west of Toronto now, is prices are extremely inflated relative to the income. So from a cap rate perspective, there's really just not the advantages that we would see just south of the border. So that was one of the reasons. Also, the Landlord-Tenant Act, taxation, there's just a lot of reasons why it helped our investors and myself personally to look south of the border for our investments. And that's when we got started at Miller Beach and why we're continuing in that vein. But these projects, what they're similar is, we're invested in tertiary markets. You'll see that Windsor and Sarnia, these types of markets, not just because they're close in proximity to Detroit, really it was more about the fact that they produce substantial cash flow. The investors that I've always worked with had one thing that they wanted, yield. They want to be able to get payment monthly because they're investing, because they're looking for a way to support their lifestyle. So in addition to the equity growth that we get, and we're grateful for that as well, our primary focus is that yield. So you'll see on these projects, we entered many of them in the 2015 range, exited them, again, sort of just before the high. There's no crystal ball. I think it was obvious to everyone we were nearing a time that it was coming to the end of the line. And so we exited many of those deals, pulled in assets to be able to redeploy that capital into the US. I also want to take a minute and introduce you to a few key members on our team. In order to do the business that we do, we have people who are specialized. You've heard a bit about myself and what I do with respect to acquisitions, negotiations, and management, but it's important to identify a few other people here. Stephen Clark, as our COO, has a tremendous amount of experience in sales, marketing, fundraising, working with regulators. He's been a really great lead hand here at the organization, as well as working with Janet Rodriguez. She's an EMD registered with Belco, and she does a fantastic job with our investors and helping them through the process. But obviously we have to report to the SEC and the OSC and other regulatory bodies, and we need someone with the great experience that she has to be able to do that. Needless to say, as part of that reporting, having a proper controller and some of the work that we've had from both Ramiz and Audrey are exceptional in being able to support all of our reporting that needs to be done, both to investors and to regulators and auditors and that kind of thing. So having that great team is fantastic. My father, Paul Ostrander, has graciously worked with me for years and put up with me. He's been a great mentor. From a professional perspective, he's taken a number of companies public and certainly turned around businesses. And so having him come in and support us has been fantastic. He deals a lot with our corporate affairs and other legal issues and strategy. So it just gives you an idea of the team that we're working with here. Shannon Wilson is fantastic on site. So she and I work very closely on the management side of things. And as the regional manager, she's actively on property every day right now. So when I get a chance to go down, or Steven's at the property and we're down there, we get a chance to kind of work with her. She's just done such a great job at improving the culture on the property, making sure the resident experience is getting better, but also making sure that our projects are getting completed, and most importantly, that we're able to collect rent. You know, we've got to make sure that we deal with all of those KPIs. It's great to create a good experience for people, but having someone with that strong business focus has been exceptional. So that kind of rounds out our team, and I'm sure that you may have questions that are coming up. Reach out to us. We'd love to share a bit about what we do. We think that what we do at Contrast is a little bit different than other people, and we'd love to share more about that with you.